Rising U.S.-China tensions have provided a jolt of volatility to the markets, but has the trade détente come to an end, and what does it all mean for investors? Joining us now to discuss is Kevin Hebner, global market strategist with TD Epic. Kevin, great to have you back on the program.
Thanks, Greg.
We got a flare-up on our hands again. I think it started about last Friday with a few social media posts. In this flare-up, who has a stronger hand right now?
And I think that's a question. So who has the cards? And to some extent, we're in a situation of mutually assured destruction like we had during the Cold War. And they both have significant cards. And they're both wary of going too far because the pushback will be too hard. And then in that instance is who can bear the most pain. And the famous taco trade for Trump always chickens out. That still is the case. Trump very much worries about the cost of equity market taking a hit or Ford having to lay off workers and things like that, whereas China seems very happy to take pain. So the dynamics of how this playing out is very interesting.
Now, this wasn't as much in the headlines until last Friday. We thought perhaps there would be constructive dialogue. Is something really broken down here? Is all just sort of like posturing on the negotiation?
So there's a lot of pushing and shoving. The end game for all of this is we have a form of decoupling, and that the choke points that the different countries have against each other do get eliminated. For example, the United States creates capacity to mine and process rare earth minerals, and China moves up the semiconductor stack, for example. So we will move to a form of decoupling, eliminating choke points. But in the meantime, there's a lot going on. So last Thursday, China tightened their export controls on rare earths. And these are important because so much of economic activity in the US and other countries is downstream of rare earths and gets negatively affected. The Trump administration was very upset about that. And so on Friday, Trump announced that starting November 1, he would increase tariffs on China by 100%. The rare earth controls go in place December 1. So in both cases, they announced dates well into the future because this really is a negotiating tactic.
We just got a headline in as we were talking about this. China's Ministry of Commerce accusing the U.S. of creating what they call a panic over rare earth controls, and they say that they're open to talk. So this feels like a back and forth negotiating kind of situation.
Yeah, and very much. And also when the Chinese Ministry of Commerce, they were very active on the weekend trying to de-escalate, saying that rare earth controls are important, and particularly for rare earths that would be used for military purposes or advanced semis, but we don't want to escalate. We need to trade. We need to be friends. And both the White House and Beijing were sending those messages on the weekend. And you also have to be cognizant when we're getting these sorts of announcements that DC is always talking to its domestic audience, for example, MEGA, not talking to Chinese negotiators. And so when Beijing makes a press statement, they're often talking to the local stakeholders within China. There's a lot of communication between Beijing and DC on trade. The very senior people are talking weekly, they're meeting monthly, and then people below them are in constant dialogue. So there is a lot of back and forth, and most of these things are for domestic consumption, their audience, MEGA, or the equivalent in China.
So we look past those headlines aimed at their domestic audiences. How do things play out from here?
So we've got a lot of dates coming up on the horizon. So they're negotiating currently, but for example, October 31st, there's the APEC meeting in South Korea. So the hope is, and the plan is for President Xi and President Trump to meet at that time. And there's a lot they could talk about, and they could even come up with the outlines of some type of trade agreement. And there's a number of areas that are win-wins for them, and that could happen. The day afterwards, November 1, is a date when the 100% tariffs are supposed to come in place. Prediction markets are saying 10 to 15% chance that actually happens. So they think it's pure bluster from Trump. He's just negotiating. And then we have a couple events later in November in leading up to December 1 when the rare earth export controls come in from China.
There's a lot going on. Obviously said there's headline noise. There's actually people talking to each other through other channels to try to get to some resolution. What does it all mean for investors? How should an investor approach this story?
So it means a lot for investors. So one thing it means for investors is the U.S. does want to decouple. The U.S. wants to reduce its imbalances. It wants to reindustrialize. So, for example, there will be a lot of production taking place in the U.S., reshoring, home shoring. And so sectors like industrials and materials that benefit from the reshoring of industry to America. And it is happening. I think investors, the consensus, are too skeptical about this. I think it's likely to happen. Infrastructure will be a big beneficiary. So you need ports, railways, pipelines. You need a lot of stuff for this to happen. I think overall this is still very good for tech because we have two AI superpowers. They're both deregulating. They both want to win. They both don't want to come second. And so it's very strong tailwinds for the tech sector in the US. Outside of tech in the US, it trades on a very big multiple premium relative to the counterparts globally. And we think it makes sense to diversify ex-tech out of the US into global champions in the UK, Europe, Japan, China, and so forth. And there are opportunities there. And one of the big things we've been talking about is a weaker US dollar, because the US cannot rebalance without a dramatically lower US dollar, probably 35% lower relative to the renminbi. So it's a pretty big move.
When we think about these kind of conflicts and these kind of disagreements, I think the human narrative likes to form things into someone's going to win and someone's going to lose. Is this a big enough global economy, a big enough planet where both of them can win in some capacity? Two superpowers?
So there are a lot of win-wins, but sort of broadly what's happening is the US was the global hegemon, the empire for a long time. Now we have the rise of China, which in many ways is a great thing, tens of millions of people having lives that their parents and grandparents couldn't have imagined. So a lot of wealth creation. But it does mean that there is a lot of pushing and shoving between the two economies. China is challenging the US on all dimensions of power, economy, technology, defense capabilities. And the US is pushing back. And it's created a lot of national security risk, a lot of vulnerabilities, a lot of these choke points. And so we're moving to a new equilibrium, but in the interregnum, in the interim period, there is a lot of uncertainty and a lot of moving pieces.